Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuning in to Traders Nation. My pleasure. Have back with us once again, Sam McElroy, co-founder of @Financial and @Financial Investments. Sam, welcome back to Traders Nation. How are you today?
I'm doing well. How are you?
Doing real good, thanks. Topic today, well, we're going to be looking at consumer confidence. It spiked as the labor market sentiment approaches record high. What's going on here?
Yeah, I think there's a couple of things that have been happening, one of which is that job numbers, unemployment numbers are still looking good. And as we all know, a number of economic data, including GDP, was higher than what was forecasted.
Sure.
And I think that really created an uptick in terms of consumer sentiment. It dropped a little bit in January of this year. I think that's to be expected after the December that we had.
Sure.
And then it started creeping back up. It dropped a little bit in March, and then we saw in April that it ticked back up again.
Right. So there's a couple estimates that look at those conditions, and certainly one is the present situation index and the expectations index. Both of these are really kind of marching north of here. It certainly tags on to what you're saying here today, right?
Yeah, I think it really does.
Yeah.
I think that there's a lot of information out there, and if you look at a couple other indices, whether it's the Consumer Confidence Index from the Conference Board,
Sure.
or I know University of Michigan kind of has like a survey that they do about that as well. They're all kind of saying the same thing in terms of this overall trend and pattern that we're seeing.
Yeah, so jobs are plentiful at this point. In fact, we got more jobs than we got people to fill them. Certainly shores up that consumer confidence, doesn't it?
Yeah, I think it does.
Okay.
I find that it's really interesting because when you're talking about consumer confidence,
yeah,
a lot of it is based off of just people's perceptions and things that are happening as well as economic data.
Sure.
So I think that, there's a number of different pieces that can really bleed into that in a sense.
Sure. So let's touch even further on that. So you're right that there's this static that's in the air. People know, for the most part, that there's more jobs than there are people to fill. People see spending. People, other than today, the stock market for the most part is doing pretty good. They're seeing some of that rebound in the 401ks happening. So there is this kind of good vibe that's really kind of going around. Businesses have that good vibe. They're confident too, aren't they? Because let's face it, I mean, for the longest period of time, they had that fear of taxation and regulation being run out of business for that, and so that positive vibe's there to grow. So consumers are kind of feeling it all the way around, aren't they, Sam?
To some degree, yeah. But I shouldn't say always, but right now, I would say that I appreciate the jobs numbers and the stuff that we've had, but I'm also a little bit skeptical. There's some things that I'm continuing to watch that I think could be, really meaningful and salient. Some of this is quantitative and some of it is qualitative. We have a tendency to consult with and talk with a lot of individuals, and I got to say, especially last year, and I'm still seeing the trend this year, I'm seeing a lot of business reorganization. I'm seeing a lot of senior people that are telling me that entire divisions are being dismantled. So while I think the job numbers are really good, I think that there's some underlying currents I'm still seeing from a business standpoint. I'm still seeing a lot of businesses doing stock buybacks and other things like that.
Sure.
So I don't want to paint this picture that everything is now perfect, nothing can go wrong, and we can all ride off into the sunset.
Right.
Because there's a lot of question marks that are still out there. If the job market is so great, why is average wages not really incrementally increasing faster? Why are we not seeing inflation faster? So there's a lot of things that I think we just want to make sure that we're not kind of getting caught up in this whirlwind of look how great things are, and that we're keeping a finger on reality at the same time.
I see. So inflation's a little bit low, and folks are seeing a little bit more in their paychecks, though, from the tax cuts, et cetera. Maybe even the raises and certainly the bonuses that the businesses are sending that down. But I want to focus. So you said something about business reorganization. What are they reorganizing? For instance, are they shedding some of that old divisions that just aren't up to date? They're still sitting at 1.0, or is it something different on the reorgs? Your thoughts?
I'm seeing a little bit of everything.
Yeah.
But really, at the end of the day, and we have to be careful how much we interpret into this, because businesses should always be be looking to maximize profits, which means that they should always be looking to only have the overhead or expenses that's necessary for them to achieve the profits or revenue that they're going for.
Yeah.
So we can't look at them reorganizing and say, well, it's all fear-based. Yeah. But in a sense, what I really see happening is businesses trying to find ways to cut the bottom line.
Okay.
I see a lot of strategic moves being made in preparation for things that could happen in the future so that they're more resilient if economic conditions do start to shift.
Well, that makes perfect sense to me, and I'm down for that because let's face it. So let's say the economy turns for the worse, and these companies are set up, right? They're proactive in being set up to be able to wave the weather if an economy were to turn against them. But if it doesn't, I mean, it's no harm, no foul, right?
Yeah. In a sense, it's no harm, no foul because assuming that it was something that was necessary in order for them to be more streamlined or more effective, then they should be doing that irregardless of what they see happening. Yeah. I think sometimes when you see a number of businesses looking not necessarily at ways just to maximize revenue, meaning that they don't necessarily see a strategic opportunity to increase the top line, and they're really starting now to shuffle the things to change the expense line, to me, sometimes that's just a little bit telling of where they see the economy going and where they see their growth potential going and where they see their spending power going in terms of the impact they can have in the economy.
Sure, and I'm thinking also, too, businesses are smart to the fact that employees, since, the job market is thin out there, it's hard to find really good people at this point. It's to the benefit of the employee. This is their bargaining chip now. The markets have turned, the tables have turned and the market has towards their favor. Would you agree?
Yeah, in a sense, yes. Okay. But I'd also say for a number of people who I know have been laid off recently, it has not been that easy for them to find employment. And this kind of goes into another direction.
Sure.
But I'm seeing a lot of people, especially in a certain age group, that are finding it hard to actually maintain their positions in the labor force right now.
That's interesting. Probably 50 and over, I'm guessing.
That's right.
Yeah, it's totally. The overall economy grew 3.2%. We're almost out of time, and I want to get to this in the last quarter. Do you think some more growth coming? Hopefully? As long as the feds don't get in the way?
I'm concerned how to say this because in a sense, in my heart of hearts, no, I don't.
Okay.
I think that we may see a little bit more continuing on this uptick, and I don't want to say that we're going in the toilet. The problem is, if we define a recession as contracting 2 quarters, sequentially, then it's hard to maintain that 3.2 consecutively. So even if we go from 3.2 to 2.9 and 2.7, technically we're in a recession. And I think that that's kind of where one of my concerns is starting to emerge.
Yeah, interesting. So since we've mentioned feds and we got just a micro minute, if the feds leave rates alone, will this mean that we're going to see a white flame in regards to the economy going forward then?
I think that it could spur us forward. The problem is I think the Fed is playing a lot of different games. So, yes, they're saying that they're going to leave rates alone, but at the same time, they said they're going to stop unraveling quantitative easing. And that can have the same impact in terms of flattening the yield curve or inverting it like we saw earlier in the year.
Right. And if the flattening continues, what kind of problems we got?
Well, that's major problems because banks make their money on the spread between short-term rates that they borrow at and long-term rates that they rent out. So literally, the Fed may create a recession because if there's no incentive for banks to want to lend money and they start tightening their underwriting, they can stall the economy.
No good for us. Where can we find you, Sam? You got a website?
Yeah, best place to find us is on our website, www.atfinancial.com.
All right, atfinancial.com, atfinancial.com. Head on over there today. Sam, thanks for your time today. Appreciate it as always.
Yeah, my pleasure.
You bet. All right, stay tuned. We'll be right back.